Yo, what is up guys? Welcome to another video. So today I'm going to talk about something that's for the investors of the channel. Now I will say right now that I'm not an investing channel. I'm more of a just self-improvement and financial channel. I give you guys advice on things that I would have loved to learn when I was younger and things that I look back into like right now and see how I would do them better, you know. And one of those things is investing, because investing is one of those things that it's very emotional and it takes tons of time to learn. And over time, I realized that it's better to be an investor than a trader. Although trading does have its place in time if you're in the phase two of of your strategy and you're like, well, I get my recurring income. I can invest this amount and not worry about it. But anyway, guys, today we're gonna talk about the market, because why not? Why not talk about the stock market, especially with how bad it's been lately? There's a lot of fear in the market. Hence the title of this video. We are on the fear phase of the stock market right now. And well, I'm going to show you guys a cool graph. It's called the stock market cycle. So as you can see right now, this is the stock market cycle. I'm looking at my computer right now. And you can see how it starts in the stealth phase, and then it takes off, and then it goes into the awareness phase, where the first sell-off and bear trap occurs, then media attention, then enthusiasm, greed, delusion, the new paradigm, we're gonna get to all-time high, this is the new market, and then denial as it starts falling, and then there's a bull trap and then return to normal, and there's fear right now. You can see right there. And then after fear, capitulation, despair, and then return to the mean, where the stealth phase takes over again. And well, basically we are on the fear phase right now. And yes, guys, that does mean that capitulation might be on the future. Capitulation usually means when everyone gets hurt. Like I'm talking about Wall Street gets hurt, retail gets hurt, even people that don't invest in the market get hurt. That's when everyone takes collateral damage and prices get really cheap. And those that accumulate during this period make so much money once everything starts going up again. Now, for what I know, every market cycle takes about 10 years to occur. So, fear and capitulation can be something as short as 3 months, like in the pandemic, or it can be something as long as 1 year, 2 years, even 3 years. So, right now we are on the fear side of the market, and nobody knows how long this fear is going to last. So, as normal, people are freaking out. People are like, if you go here to like the Fed, everyone's like, oh, well, look how little we have done, and we're gonna be at 4% by the end of the year. And look what happened in 1980. We're gonna get Paul Volcker or whatever that guy's called. I don't know, but essentially, there's a lot of scared people. A lot of scared people, mostly older people, because if you're in your 30s or in your 40s, you have no reason to be afraid of the market. You should honestly be consuming all these stocks because they're right now they're so cheap. If you're in your 60s and 70s and you're like, first of all, I don't know how would you be in high growth at that age, but I mean, sure, go for it. Then I'd be scared shitless, because otherwise, I could lose half of my retirement. So it's mostly people that were skinny dipping that are scared. And to be fair, a lot of people in this economy are skinny dipping, using debt to essentially invest and acting like they know what they're doing. So obviously there's going to be a lot of fear, right? So yeah, guys, that's essentially what's going on. We are on the fear phase of the market, but even so we are in the fear phase of the market, this is a tremendous opportunity. And I'm going to show you guys. So we're going to do some technical analysis here, astrology. So as you can see the SPY here, you can see how it was literally like at the start of the year, it was at 478. And right now we're at 366. We are literally breaking to like support, and we're just crashing straight down. This is literally like the June lows everyone was talking about. We're really hitting them, huh? And if you guys remember, back in March of 2020, I'm gonna go right here. March of 2020. Well, this is way more. Okay, March of 2020 was way over here, right? So we're still pretty high up. That's why there's a lot of fear. And if you're in the index, this makes sense. I would be scared shitless too, because holy smokers, that's something that Jeremy says a lot. That's a long way to go, huh? So if you're in the index, I could understand you being scared. And in this case, I would reassess my trading, not my trading, but my investing portfolio. I would be like, well, how much do I have? How much am I willing to wait it out? Am I going to wait for the Fed to pivot? Which, I mean, to be fair, when the Fed does pivot, the market does tend to rally. So waiting it out might be a smart strategy. if you're loaded. That's if you have over $1 million portfolio, then it makes sense to be a little bit more defensive, right? But if you're young, like if your portfolio is under $1 million, like why would this scare you? Why would you be scared of this? This is index. This is old people with millions of dollars and a lot of time to do this, you know? If you're young, you got to look at opportunities. And if you're in the fear phase of the market, remember growth. I wish I had my chart here. There we go. Remember that growth takes the hit. Growth is the first thing that gets hit. So even though the index is in fear, growth is actually in capitulation. Right now, growth, that means like speculative stocks, they are in capitulation. And I'm gonna show you some stocks. I have investments in some of these. I don't have investments in some of these. I'm just gonna give you guys some examples of capitulated stocks. So, first thing I'm gonna think about it's Netflix, because obviously Netflix is super capitulated. So if you look here, I'm gonna get this out of the way real quick. So as you can see here, guys, in November 2021, Netflix was at 700, like 690, 680, like really, really high up, right? And then it started like getting a lot of fear and it dropped massively. This is a high growth one. This is a high growth stock. And well, right now, guys, we're at 228, which if you go to the pandemic, like that's like 2020, right? We are literally lower than March of 2020. You can see it right here. We're literally lower than the pandemic on a stock that is, I mean, I know Netflix isn't like the best one right now. There's like Disney and Hulu and all these other, but come on, guys, it's freaking Netflix. You know, everyone uses this. It's insane how cheap it is. And you know, if you're like looking at stocks like this, I mean, how can you not buy? Like, how can you not be buying at least, I don't know, $100 of it a week? You know, if you have the money, like, it's all dependent on your income. But honestly, like, yeah, I mean, yeah, sure, we could go down to these levels, right? Like, these are the unmistakable levels of 2015, 2014. If you want to like give an idea of the interest rate, differential to the stock price, you can see here some people can do like the math and be like, well, in 2007 we were at 5% interest, so we gotta go back to 2005. How much was Netflix in 2005? Well, but you gotta look how much money Netflix made in 2005 compared to now, and I can tell you they make way more money now. So you gotta do your math, your math and your calculation. But I still think that Netflix, I mean, I put $100 a week on these stocks. It's not a lot, but for me, I'm just gonna keep buying, because knowing like stocks like this are so cheap, you're literally taking money from the rich people as we speak, And this is not the only one, guys. We have PayPal. I mean, look at PayPal back in the peak of 2021 was like at $300, July of 2021. And right now you can literally buy PayPal for about $86. I mean, that is that's like a 60% drop, right? I think it's even more than that. So, whew, man, that's a big drop, And if you're like, oh, well, let's look at the pandemic. Well, in the pandemic, PayPal was like $89. So we're literally at the pandemic lows. When the economy was shutting down and everyone thought that we were just gonna like be home and do nothing all day for years. And you can see right now we are literally there, equally there. And remember, all the money printing already happened, guys. Like this is some serious like dips. This is incredible. So if you're buying right now, you could think of the medium of price of PayPal. I'd say a decent price for PayPal would be about 150, 160. Anything other than that, unless like the economy is booming and even the low and middle class are making a lot of money, I wouldn't really bet over 160. But hey, it did go. If you look at the technical analysis, it just took this as a support and just rally straight up. So, anything under that, I believe, is cheap. And well, that's another stock that I'm putting $100 a week. I'm accumulating, selling positions that I'm not investing anymore, and I'm putting $100 a week every week into PayPal. That's is another wonderful stock. So you can see these opportunities in the market. There's Shopify is also another one that was like 100 and something, 160 at the peak of 2021. And if you look at drops like this, guys, this is literally drops like the dot-com bubble. This is drops like the 2008. This is not, these are massive drops. These are not drops that you get on average on a normal like market. This is literally like the everyone that would have sold that had a lot of money has sold. The people that are selling right now, these are institutions that are simply trying to retain their margin, not get margin called, or old people that literally are just like, oh, let me sell at the bottom because it's gonna get worse. Yeah, it might get worse, but again, this is capitulation, guys. This is fear. The market is in fear, but these stocks are going through a capitulatory phase, and you're really gonna sell these stocks in capitulation? Are you really gonna do that? If you're buying growth, why are you gonna sell at a capitulation? The spare is coming soon, by the way. I mean, if the market does do better, the market then will immediately then somewhat hold a capitulatory phase, and then this might actually turn into a stealth phase where the market will just wait it out. If I were to think of the last thing that bulls have on their side, I would say it's earnings. So, earnings is literally the last thing that bulls can use to take back control of the market and hopefully, jump back into this like little bear trap area here in the awareness phase until the Fed does its thing, and then the Fed pivots in the next year, and then after that we can finally do another stealth phase. Because you gotta remember, guys, that the market doesn't do 30% year over year. This is a very strange thing that happened. Like this massive amount of growth, this shouldn't happen. This should not happen, every year. This is something that happens every, this right here, you're seeing the equivalent of growth of 5 years. Like this entire thing would be 5 years of growth, and you saw it in one year. So essentially, the market's gonna correct. How low is it gonna correct? I have no clue. We might hit the March 2020 bottom, and then we might actually like get back up here to this top, and then we might then begin another small over time rally. We don't know. Nobody knows. This is why the market freaks out so much, because they don't really know what's going to happen. So they're just kind of trying to estimate and figure it out. But, until the index and the Fed does their thing, all you got to do, guys, is just buy little by little, buy weekly. Do your stock analysis, your stock, study the balance sheets, know what you're buying. If you use the thing that you buy from, like, let's say you use PayPal. Well, why wouldn't you invest in PayPal if you literally know how their products are and people use them? If you're a dropshipper or if you have an online shop and you use Shopify, well, you know how this works. You know it's cheap. Why don't you just buy some a little bit? SoFi, if you use this as a bank, why don't you buy SoFi? These are things that you use. I say you like VR, well, Meta, Oculus, Facebook, right? Why won't you buy some Facebook? Buy things that you believe in. Even me, like I'm, as much as a crypto guy I am, I'm literally buying Coinbase, guys. Because Coinbase is definitely going through a capitulation phase. I mean, look at this. This used to be at $350 in literally November of last year. It hasn't even been a year, and this is down 80%. This had a dot-com bubble type of crash. And these are profitable companies. These are not companies that are losing money. If you're buy through Coinbase, you know how big the fees are they get from crypto? It's insane. If you do a lot of like financial and houses and all this, like car buying, you sign documents for DocuSign. So, and look at the price, guys. Like this was like $300 in July of 2021, and right now it's $52. If this isn't a capitulation event, I don't know what is. Now, like I said, guys, this doesn't mean the market has gone through capitulation. We are actually still in the fear phase. Because what I'm showing you guys is growth. Because I don't have a portfolio over $1 million, so I'm trying to get there. And the only way that I know how to get there is buying high growth, high risk stocks. But buy companies that people use and are profitable, of course. Or companies are going to be profitable in the future. So, but in the index, companies like Apple, companies like NVIDIA, AMD, companies like Tesla, these companies, they have people that are scared, there's fear. but there's no capitulation there yet. There's no capitulation in oil. There's no capitulation in value stocks. There's only capitulation on growth. So how much capitulation is there left? Could be plenty, could be a little. I have no clue. So what I do is I just buy what I believe in every week. I buy stocks that I know are oversold according to my strategy, and I just hold them and I keep buying every week. I'm not trying to time the market. This isn't my goal here. What I'm trying to see is, if the company I would buy a year ago, why wouldn't I buy it today? Has anything changed from a year ago that right now I'm like, oh, other than the market conditions? No. Honestly not. The only thing that has changed is that the interest is higher, but that only affects people that have like debt. Doesn't affect people that are debt free, So yeah, guys, I just want to give you guys a different perspective on the market. I know there's a lot of fear right now, and I know there's people saying like, oh, we're screwed, there's war's gonna happen, and we're gonna get interest rates up to here to the 1980s, and we're all gonna suffer. I'm not really. From what I can tell, guys, the average American is just fine. The average American doesn't invest in the stock market. Heck, even the average American doesn't even have $1,000 in savings. If you look at like the articles according to the articles on the news, so it really comes down to what you believe in and how much are you willing to have some conviction. But it pains me to see these like convictionless YouTubers that were bullish one month, now they're bearish, now they're continuously bearish because things are bad. They're not investors, guys. They're traders. If you want to be a trader, then fine. You can get in and out from your favorite stocks and lose a lot of money on the way, and then hopefully make it back when things get better. But I can't time it. Statistically, it's been proven that you are better just buying and holding stocks you believe in. Once you're a millionaire, once you have enough money and you essentially just get a high income yield and you don't have to work for that money, then you might be worried about, if the market is going to crash and then get out and then wait for things to get better. But I don't have that. I don't have the luxury of having too much money that I'm scared that I'm going to lose it all, So I'm just going to buy what I believe in and just keep holding it and keep buying it and keep holding it. And when things turn around inevitably, I'll be there to witness the reversal, and it's going to be very, very nice. It's going to be as glorious as, how you're seeing it go down? Well, it's going to be as glorious as seeing it go up like this. Yeah. Anyway, guys, I just want to give you guys a different perspective on the market. Hopefully it helped you out. And remember, just if you believe in the companies you're holding, just keep buying. I mean, if your dollar cost average is a little high, do your financial statements, revise your positions, see if it makes sense to buy them. Because remember that it's not that stock doesn't sell. All the stocks are on sale, so you might be able to see different opportunities on other stocks, and it might be smart to sell what you have and buy something that you might see more potential in. But anyway, guys, thank you so much for watching. I'll see you guys in the next one. Peace.